Alrighty, so it's been a long week, and the last time I did a video, it was July 22nd, whenever we had that dip, and I was actually kind of excited, and things were looking up. I thought at the time, I thought we would get a bounce because we did go back and retest this 9 area, and then earlier in the week, shortly after this bounce here, because you know, we can get a recovery. We can bottom on a 6, and then we can recover. So this day right here, it was Friday. Price opened up real nice. It went as high as 35.5. If the week could have closed above 35.6, say 670, and it looked like it was going to, and then later in the day, there was a huge sell off. So that was the 25th. Let's see. Right. So the 25th, I know there was, I mean, the day opened up real nice. Where are we at? This is showing a sell off early in the morning. But let's see. Oh, because this isn't set up to UTC time. Here we go. All right, we're going good. All right, so yeah, 25th right here. So here's the start of the new day. The day started off real well. Uh, it was around 35. We looked like we were going to get momentum, get maybe some resistance here at 36. The week looked good, and then we can see here on the CMF, because I remember seeing on the CMF, it just started falling like aggressively, and then we had a large sell-off right around, I believe it was like 11 Central Standard Time here. Where were we? Yeah, right around. We had already maybe earlier in the morning. Yeah, it was around 11, like lunchtime, and we saw that aggressive sell-off. So, and then we hit the 9. I have it marked here, right here, and we had the weekly. So you can see that there's a bunch of support right here. But what kind of caught me off guard and what I checked before I started this video, so Bitcoin hash rate. We know that China has cracked down on them since April. Uh, price has been following hash rate, and we did close out the week pretty strong. These last couple of hours before the new week started, right here, you can see basically 2 hours before we had a big $1,500 candle. I mean, this was 200. So combined, we had it's not a large move in dollar terms. It's pretty large. So from like right here, say from where this 7 is all the way up, 2,200, over 2,000, 7% move to close out the week really strong. It almost seemed price was moving up so aggressively into the opening of the week that we would get, there was still potential that we could close. If we gained, we had like a $3,000 day, definitely possible that we could close this on a green 2 and have the retest. So, but I mean, like I said it here, you would have been out of your position, and then if you wanted to stubbornly wait based on this uh, triple MA strategy, you would have exited here whenever the price closed below that 4 hour or the daily below this low, and that would have gotten you out. So you're out. I mean, yeah, there was some price recovery, and we can look at Coin Market Cap to see what the other coins have pretty much done. Yeah, Ethereum ran up a little bit, Cardano, but they're still overall down. Bitcoin dominance is actually increasing. It's up 50, almost 50%. That's been going up. I'll bring that chart up later. So that's actually good. All the money's rotating out of the alts back into Bitcoin. So usually what happens in these market cycles, you have Bitcoin rallies, and then once it reaches a certain area, the money starts to flow out of Bitcoin into the alts, which I think what we saw, and we saw that Bitcoin dominance going down, which kind of had me a little bit worried that we were getting so much move in the alts, and then we were getting that pi cycle indicated that we had topped out and didn't nail the top this time. Uh, Assuming that we think that is the top for this cycle, which I don't. Even though what I'm about to show you, which is kind of discouraging, because like I said, price has been following hash, and the hash rate took a beating this week. It's down 70% from the all time high, which is these aren't levels that haven't been seen since like 2019. So it's pretty bad. Like the crackdown was significant. And I think that that added like a capitulation. So like this was like forced capitulation, forced selling. Uh, there's no way to assume how much selling was, or kind of, maybe if you did some on-chain analysis, you could do it, but using basic TA, the CMF is what we're using to determine sell pressure. So unless you did some fundamentals and looked at the way their coins were moving, which I have looked at some, not haven't done the fundamentals myself, but have looked at some data that says that long-term holders are buying up the coins. So that could be supporting the price, and maybe the relationship between price following hash has now been broken, and we can see some recovery in price. But so yeah, I'll bring up some other charts. But here's the hash rate. I mean, this is, as you zoom in here, this doesn't look okay. That 198 equihash. No, this is what this is in. This is in terahash. So 198 million terahash, and then it's all the way down to 58. So that's a 70% drawdown. And if you zoom this out, you can see it just fell off of a cliff where we had some recovery. Looked like we bottomed out here, and then within, it lost like 50% almost in a matter of like 4 days. So even more miners went offline whenever we thought, okay, they went offline. The majority of them have gone offline, 90+%, and then we're seeing some recovery because miners are coming back online. But then we see a big jump. This literally 2 days, like 50% fell off. It just fell off a cliff. So in correlation, so you can see this chart provided here by Zach Vol. I think that's how you pronounce his last name. He does a lot of good, Bitcoin content. But you can see the relationship here, and this is since April, where hash rate kind of climbed, and then we've seen a decrease in price. So is this going to hold up? We'll see. Maybe that relationship is now broken, but I would say, my thesis was that price would recover as soon as hash rate recovered. We saw a recovery, and then in 2 days, it just fell off of a cliff. So is price going to reflect that? We had a rally. This is a reversal candle. We can look at some. So based on that triple MA, no, like we're not in it. But if I look at the TD sequential and my RSI, so we have a 9 here. Yeah, we've gone 1 to 4 candle correction. This reached those targets, but this is like no trade zone. So like 1 1, you're not going to trade. We don't have a distinct pattern. This is kind of leveled off. Let's bring up the CMF real quick. CMF on the weekly looks extremely weak. I think if it breaks this zero line, it looked like we had a bounce, and we kind of did for like 3 weeks. Not a significant, 10 as a total. It was 10, but we didn't have like a big 20 to 40% recovery. So are we going to get another bounce here? Is it possible? If I was looking at this on the upside where we had nines, so we had a 9 on the daily, we hit a 9 on the 4 hour, and I think we had a 9 on the hourly as well. We hit a 7, but we had a 9 over here. So it was definitely excessive selling. RSI, our indicators were, as price was going flat, our indicators were trending up. On the 4 hour too, not so much here. You can see that this selling was going to be sustained because this was just trending lower. We weren't getting really bullish divergence. If I look here and I can draw a line and say, okay, we have bullish divergence on a little bit longer, right? So that's here, and then as price goes down, it goes lower, we're getting bullish divergence. I can even maybe move it here and say eventually price will recover, right? And it did. We have moved up from those lows. Those were what? Low 30s. We've moved plus 10, a little bit more than 10%. And we can see right here that there's kind of like resistance in the CMF. If I'm just looking at the CMF, right? Resistance right here, price fell off, and we've rejected it. So are we now going to get a sell-off to lower lows? You're not in this right now, right? There's other opportunities in the market if you want to take them. Yeah, price has recovered from the day it closed on Friday, but as of right now, what do I think it's going to do over the next 12 to 24 hours? 4 hour looks like we've hit, a block. Daily looks like we've hit some resistance. We've definitely have over the past couple of hours. This CMF isn't trending up. We went over sold overbought. We could trend higher, but the CMF needs to go up. We can look at our on-balance volume real quick. That's trending up. That's a little bit of a plus. I have maybe not so much. Yeah, I have an area here that could be potential resistance. Yeah, so as far as the daily goes, we're not trading this, we're watching it because it is no trade really on the daily because we've had a recovery zone here which reached where we could potentially go on a 1 to 4 candle correction. So we could go lower. We can pull up the Ichimoku cloud now because it's relatively good at finding support areas. We've gone below all of the Ichimoku cloud lines. We finally broke below this one. Looks like it's given way. We could, mosey on here between 30 and 40,000. We know that there's massive support here. It's developed as support. It lines up with this Fibonacci here, the 50, basically the 50% area for the Fibonacci as support. We've had multiple weeks, 1, 2, 3, 4, 5, 6, 7, almost 2 months worth of price action kind of in this area where price has gone low, maybe not as low as these 2 weeks, but we've seen for at least 3 weeks and consolidation in this area that this is kind of a support zone, right? So between 40 and 30. If this gives way, we're probably going to go back to these lower areas. But we're going to see. This is going to play out, like I said, 3 to 4 months. So I've been saying that for probably 2 weeks now. And I was saying that, say, at the beginning of June, right? So July, August, September. So September, October, somewhere between there. I would say somewhere between, September. Just say, August, September, October. Or if I want to be a little bit more definitive on the timeline, September. I say September, October, where we would get. It's going to take 3 to 4 months. I think if we're going to continue in this bull cycle to recover from price, because the hash rate has just gone so far low. We can look at our hash ribbons, which have been very, very good at giving us buy signals, and right now it's saying we're out. In our trading strategy, our 3MA is saying we've entered a bear cycle. But it's just so uncharacteristic of historical price data. So if all this stuff holds, that we've entered a bear, this cycle is going to be uncharacteristic of the last decade. Basically, it's going to be an outlier because the bear cycle happened early. But then it's also, on the other hand, there's a lot of indicators, like I said, that are saying we're entering a bear. So if it doesn't enter a bear, it'll also be an outlier because we would have had price recovery and we would go to new all-time highs. That's basically, it's the two scenarios. Either we're in a bear cycle and it matches up with the past decade because all the indicators are saying that we're that way, or it's an outlier because we've never had this type of forced minor capitulation in the middle of a cycle. So there's a little bit of back and forth. So we'll either get a confirmation that our indicators are right, that have been pretty much. I can show you there's such a dilemma here, right? So it's like the Mayer multiple said we didn't get there. Stock to flow is saying we didn't get there. So that's two major indicators saying that we didn't get to the cycle high. We have the Willy Woo's top cap saying we didn't get there. So that's 3 indicators right there that I've used saying that we didn't get there. But then we have our triple MA that's saying we're in a bear market. We have the pi cycle chart here. So if I go here, we have, so we also have this 200-week heat average that's saying we didn't get, right? Because this is a high, that's a high where these reds are, that's a high, we didn't get there. So that's 4 indicators now historically saying that we didn't get there. So it's like we didn't get to our high that we should have. What else do we have? But we do have golden ratio multiplier saying that we did reach it, right? So right here we reached the high and we're going down. That's saying we got there. golden ratio saying we got there. That was the cycle high. So there's just like some models, and I had said it even months before, that there's going to be some models that break this cycle and some models that hold. And right now, there's more indicators that are going to break than hold. So we either get confirmation that, say, 50% of our indicators are still valid and then 50% aren't, and vice versa. So we'll see. I mean, it's definitely, I mean, this pullback has been historical. This drop in hash rate has been historical. Uh, you know, whenever this clears up, the TA will actually, I think, be even better because these models are going to have been stressed through basically 10 years of price action, and then a new, this is, I mean, we're just in the decade, but right at the beginning of the decade, we're basically back testing almost in real time our indicators, and we're starting to find out in this weird cycle that we're in with this energy FUD. And I mean, we're getting countries adopting Bitcoin. We got corporations putting Bitcoin on their reserves. That was bullish news. But then we have all this, potential stablecoin regulation coming in, and then we also have this China banning mining. So it's like there's so much bullish news, but then there's also so much bearish news that we just have to stick to some indicators. And the ones I've kind of relied on more, stock to flow, Mayer multiple. I mean, Mayer multiples. Oh, I don't want to leave. Mayer multiples saying that we should be out of there. Should be out of here. That's bullish. I mean, this is bearish. We're in the bearish zone, that we're going to get to this lower oversold area. We even have NVT saying that Bitcoin's on sale. Like, we're below this NVT line. That's saying that's a bargain. You should buy as much Bitcoin as you can possibly get a hold of because it's so undervalued. There's just such a dilemma here. It's almost best to just stay out until we get because these moving averages, ironically, as simple as they are, they've been so good at getting you out, whenever we've entered these cycles. And then there's one more. I know this is a lot longer, but there was just this. What's happening here is it's just an outlier that's actually going to give us a lot of information going forward. So I saw here, 360 was it? It's a 350, the 350 moving average. So the 350 moving average, whenever we've come close to this or closed below it, we've had a 20 to 40% run up, right? So we could say that we're here, and have we had a 20% run up? We have. So we've got our 20% run up from the low. Now, we've gotten this bounce, but then once that's happened, we've gone to lower lows, and we've gone to lower lows on, what did the chart say? It was the 50. So this was on the golden ratio multiplier that this relationship was shown. So let's go to the golden ratio multiplier. Where are we at? Right here. So once price has broken below the 3, so it came from the 350 MA because that's what's here. So once price has gotten to this, I think it was the close. Once it's closed below it, so we haven't necessarily closed below it, but once it's closed below it, we've had a 20 to 40% run up, and then price fails and then reaches the 50 percentile of the golden ratio, which isn't being shown here. Where is that chart at? I think it was on this one. Oh, I forgot. Where was that at? Maybe I should have prepped for this a little bit better, but was it the power oscillator? No. I think it might have been back calculated from the Mayer multiple. So it basically says we're going to get back to the lower 20s is what it was. which would align here with this. So that's one scenario. So I mean, I think we're gonna see this within the next 3 to 4 weeks. So this outcome. So it's like the next 3 to 4 weeks was. So we're on week one. So we should have an answer as to if we're going lower or if we're going to recover it to new all-time highs, and we have 50% of our indicators hold and 50% of our other indicators. They don't necessarily fail, because even though that they're saying that we're going to enter a bear market, they're only confirmed if we enter a bear market. They're not necessarily broken. The only ones that will be broken is like stock to flow. But then again, like even here, this Willy Woo top cap, that just says we didn't reach our high. It's not broken. So it's like, it's definitely a dilemma. And if you're hearing me talk about it and it sounds confusing, it's because it's trading's dynamic. You definitely have to adapt yourself, and you use these indicators and models, based off of what they're telling you. And right now, I mean, we're out of it. It's definitely a no trade zone. We're watching. Our 3MA is saying, hey, be patient and wait. Don't jump into anything, because it could, we might miss on 20 to 30%, but we could also get smoked into the 20 to 30%. So that's it on Bitcoin. I think I talked enough. We can look at gold. I don't know if it's really recovering. Nope. Stay out of gold. I think oil was actually kind of up a little bit. Yeah, so it's like we hit a 9. It's probably severely overbought on the RSI. It is. So we'll see. I mean, this is bearish divergence, but we'll see how that fares out for oil. Yeah, we hit a 9 here too. 9. Where's our next 9 though? So I can mark that real quick. Here, I'll make this red. And then get another one here. This is a reversal candle, and we are overbought on the 4 hour. Is there any 4 hours I can mark? Those all got retested. This one got retested, as did this one and this one. Oh, did this not click the right one? There we go. Let me lock it. That one's locked, that one. All right. Weekly. Mark that one too. Make that one a deep red. There we go. So there's all of our areas. So we'll see. I think we'll get a reversal in oil soon. But man, the month closed. I mean, we could see a This is definitely, it broke the trend line. It broke the historical trend line that it's held since July of 2008. So if you're looking at this, you would almost, I would say that this is like resistance area. I would say that this is a cup and handle. I don't think we're going to get a massive price rise here. It's not necessarily a descending triangle, because we didn't get a lot of, I mean, if it would have stayed here, it would have been descending triangle, but we had this big sell-off from COVID. I mean, you could say that this is an outlier and then kind of maybe fudge the data, but I'm not gonna exclude something just because it's an outlier. It's not something I traditionally do, so I'm not gonna do it, because you could say I'm gonna get rid of these 3 weeks because it's COVID and this is, uncharacteristic. And if COVID didn't happen, this probably would have stayed. That's making an assumption, and I'm not going to make that assumption. I'm just going to go off of the data. And we have here is obviously what was support and then broke down, and then what became resistance, and then what it's kind of still there. So I would say we need a monthly close above 76.90, because then the thing about drawing lines at diagonals, I thought this was a trend, but then this could be the trend, because this is still, nope. Price has gone so far up that this is definitely a break. So I can't even really like, maybe not fudge it, but adjust it a little bit. This is definitely a breakout. So definitely a breakout of this pattern, of this historical trend line that's been basically held for like 12 years. So we'll see, because if this breaks out, we have like a cup and handle almost. And I'm going to say that the initial target is going to be somewhere around. I mean, I can do a couple of things. Let's see. I can draw a Fibonacci, unless I already have it on drawn. No. I can draw a Fibonacci knowing that this was the previous low. Nope, this is the previous low. So here's the high. Oh, I got to reverse this. There we go. And I'm going to lock this, knowing that we have resistance at, wow, look at this. This is playing out right here, right at around 75. So then our next resistance is going to be around 90. And then would that align with a cup and handle potential breakout if I draw this here as far as our next target? And if it breaks out here, no, that's like 114. So I'm going to use this Fibonacci as a indication. So 90 would be our next resistance if we can break out here. So if we have this monthly close above 75.21, we could potentially break out to 90, and then maybe we'll pull back to 70s. Where is our Ichimoku clouds? Let's look at those. Let me get rid of these moving average. Oh, no, that's it. Let me get rid of this to clean this up a little bit. So yeah, we've broken through this bearish sediment here. Sentiment, not sediment. We broke through this cloud, so we could be entering like a multi-year. I mean, the last time this broke and this crossed, oil was on it basically went on a 5-year, bull run. 5 years. I mean, oil trended up. So if we can get across here in this Ichimoku cloud, we could see a multi-year run up in oil. This is on the monthly. So on the weekly, we've already crossed this. Crossed here. That went on for at least a year. So we've crossed here. So we could see a whole price run up in oil for like a full year. What's the daily look like? Daily, we've broken out. We've been bullish since July 2020. And on the 4-hour, we're bullish. Let me get rid of this because I'm just going to hide it. It's kind of messing with the visual. Yeah, so there we go. Oil looks, I mean, even though we're extended, yeah, we could get a little bit pullback, but overall, on like a larger time frame, it's actually bullish. So if you're sitting in any oil positions, you're just holding tight. I mean, our weekly MA is okay. Yeah, we're a little extended, and if we get some aggressive price movement where, if you had been in this since it gave you a full entry, maybe you didn't exit here, but since it gave you a full entry here back in November, you could take some profits if we start to see these moving averages trend down, but we could get support here. But you could take some profits. You really could take some profits now. What would the, you don't have to exit your whole position, but you could take some profits. If you entered here, you'd be up 75%, unless you want. I mean, it could have been a leverage trade, or you might have used some options or some futures to trade this, and then you could be up very big. Or you could have taken a position in like a oil company, and you would have been up even more. So yeah, you can definitely take a profit on a 75% return, possibly in oil, but we'll see. It's bullish on a larger scale, on like a multi-year scale. It's bullish. So I think that's it. I probably went 30 minutes or whatever, but let's click right back to Bitcoin real quick. Again, we're out of this. We're waiting. We're being patient. We're waiting for our triple MAs to go up, our hash rate to recover, our hash ribbons to give us a buy. What's our funding rates looking like? They're probably short as could be. Yeah, market's not short, but we can that can happen for multi weeks. I mean, you could be seeing an excellent buying opportunity if you're a long term holder, because here in this bear market back in 2018, I mean, it basically, what is it, November? We had 6 months to buy, like, you know, at low prices. So 6 months from May, all the way up to November, and then we can see massive price recovery. That would go past my 3 to 4 months, but that's just a prediction. That could be wrong. So, but bearish indicators saying we're entering a bear cycle, bear market, but we'll see how it goes. Thanks for watching.